let's get started. Yeah, we're going to be talking here, myself. I'm on here, and we got Ellie Black on here as well, and we got Stephen Morris, our senior account manager and a great teacher here as well. He really is one of our top teachers here for teaching our young people, our new people, how about the markets and how Box works. So we will get started here. Yes, we're going to go about Box, market update, how to work smarter with MSC's new features, and some let Allie take it away here and talk about Box. Take it away, Allie.
Awesome, thank you, Scott. So this is for everybody who is just tuning in for the first time, or if you just need a little bit of a refresher on who Broker Online Exchange is. We are your ultimate commercial energy brokering partner, providing independent energy brokers, affiliates, and advisors with access to all top electricity and natural gas suppliers, instant pricing, and cutting-edge software, all supported by industry experts. Box has become the largest network of energy agents, brokers, and consulting firms in North America. We connect a variety of diverse energy partners so each can benefit from streamlined, efficient options in deregulated gas and electricity markets. You can see all of those markets and see how you can scale your business nationally with our deregulated energy map, which is up on the screen for you right now. You'll see natural gas markets available in green, you'll see power and gas available in blue, and then you'll see a lot of limited availability kind of in a darker gray. Really awesome new colors, I think, on this map. Anyway, the darker gray areas are areas that we may be able to serve for large commercial and industrial natural gas customers. These are the guys who are pulling, 10, 20, 30, 40,000 decatherms and are using that gas for production or for heat purposes. So let us know if you have large customers in these areas. Those are generally the types of customers and the sizes that we're looking at in these areas. We do have suppliers who are available to serve customers in all of these areas, and you'll be able to see our supplier network and some of those brands on the next slide here. Probably a lot of them that look very familiar. Let's see, Scott, we have our next, oh no.
Yep.
Perfect.
I think there might be a little bit of delay. Yeah, go ahead.
Yeah, I think I'm frozen. But you'll see a lot of our brands on this page. You'll see quite a few of the larger guys, brands that have been around for a really long time: Vistra, Champion Energy, NG, NRG, Constellation. And then we've got a good mix of some smaller boutique retailers as well, whether they're newer on the scene, prioritizing renewable assets, or whether they've got a really unique go-to-market strategy. We work with some of those guys as well, who are really more specialty retailers and who are targeting customers in certain areas. We'd love to be the matchmaker between basically complicated customers and the best fit retailer. A lot of our staff comes from the supplier world. We've written supplier contracts. Scott and I have done webinars before on negotiating contract language and all of the different ways that we can really dig into offers from suppliers and ensure that you're getting the best possible options and that you're presenting new options and strategic options to your customers. So that's definitely something we can help with, and we're happy to put the power of our supplier portfolio to work for you. Last piece we just want to plug is our strategic solutions team, which is headed up by Scott and myself. As I mentioned, we specialize in contract negotiation, pricing optimization. We're looking at tailored sales strategies based on the specific customer's load and their priorities over the next year, 2, 5, 10. We provide seamless client support and proactive solutions. So if you submit a customer to us, we really like to come back and say, listen, I understand that you're asking for fixed all-in, but have you thought about doing a hybrid? Have you thought about passing through capacity and transmission components in PJM or in New England? So let's take a look at it. Let's diagnose what could be better. Let's do some product design. Let's do some structure work. Let's really dig into what type of product, what supplier, what contract would perform well for this customer, considering their specific load and their goals. It's really just looking to make you guys look like rock stars, like you guys have done, all of this work and really, done the analysis and have all of the market context to help your customers make decisions in this changing market. We're here for all of it. So I think that does it on just our intro to Box and our team, our coverage, our portfolio, and I will pass it back to Scott for our market update here.
Thanks, Allie. Appreciate that as always. And market update here. Yeah, we're going to go start right into what everybody, if you everybody's taking a geography lesson now, Middle East geography, I think, and understands and heard this word Strait of Hormuz, right? And I think probably the level of knowledge now of what this is has greatly increased in the past month, and that's the reason why is now this is what the war is all about right here now. I mean, this is now a absolute. The battle now is about this Strait of Hormuz because oil 20%. Well, we'll get into in a second here. This is now closed in a way, in a sense. Mines are being laid. Iran's threatening to shoot down anything that goes through there that's not theirs. They're allowing, of course, Iran's letting their ships go through. They control this. This is the battle. This is where it's going to be done at. We can get into the whole military strategy and talk about politics, whether it's right or wrong to do this, all this. We're not going to go into that. We're just going to tell you what about energy and its effect and what's going to happen and what we think is some of the side effects of it. So, Strait of Hormuz, it's closed. Boom. 20% of global LNG supply comes from right here in Qatar. So obviously you can't get through there without that and without the shipping and getting it through. That's a big issue. Yes, we know about crude oil is the same thing. There's a lot of tons of crude oil can't get through there as well too. 15 million barrels, although like 5 or 6 of it's kind of coming through other ways. It's still a big hole as well. But we are focused on natural gas and power, not crude oil. It's totally different markets. Very little effect on what happens in crude oil happens to gas. Talk about that in a second though. But one of the main things we want to talk about here. So 20% of global LNG supply. Okay, great. Maybe let's ramp up U.S. LNG supply. We got capacity. We do LNG shipping now. While we are currently exporting before the Hormuz closure, 19.5 BCF a day, which puts us right at very much the current level of LNG export capacity. Again, this chart here illustrates increase in daily export capacity. This is basically projects that are already under, like end of 2026. We're going to nail that. These projects take 3 years to complete, to basically get going and complete. So we know this through the end of 2028 of where this is going to be at is 29.1 BCF a day. So there's no immediate help here. And even if we get to that, there's no immediate help here at all to basically, we can't just ramp this up 10 BCF just like that, like help out at all. So no big effects on you. If there's can't be any more gas we send out, there's not really any effect on our gas markets in a sense. So just want to clarify that, put that out there. It's really important. This is why natural gas prices really have not increased all that much, especially in the short term levels as they have in the crude oil. But there is some effects on U.S. power and natural gas markets, and I just want to go into these. By the way, I'll interrupt here 1 second. We have a PDF. If you look in the thing there, we have a PDF that's a handout where it says handouts in the kind of control thing for this webinar. Just click that, download it. We'll also be sending it out, but you can download it and get all these slides yourself here as well. Anyways, go back to it. So this is the beginning of Europe's spring-summer storage refill season. So same as ours, we need to rebuild. Well, they're not going to really be able to rebuild all that much because they rely heavily on LNG from Qatar and US as well, but a lot of this Qatar stuff is going there, and you can't really just make it up. You open it up, you just make it up, right? And our projections are this really isn't going to clear up here at the very minimum, probably a month. So that's just missed supplies coming there, missed inventory, which means that the longer this goes on, there's bigger and bigger risk that they're going to be severely undersupplied next winter in Europe. And they got to pray to the weather gods to warm winter for that, for there to be no major issues. But anyways, the matter is directly for U.S. buyers. because we don't really have European customers here, but it matters directly for US buyers because New England states compete with European utilities for LNG cargoes every winter. We actually put a piece on this before this whole thing. Surprisingly, we put it out there, about a week before during our blog post. You can click that here to get the PDF. That's what I'm saying, the PDF. You can click that and you'll go to it. Also, you can go to our website, the blogs area. But we find this to be bullish for New England gas and power. Because they're competing directly with the LNG. So prices are going to go up. If there's bigger demand for less supply, prices go up, supply demand. Economics 101, and with that, New England competes with that. That's where they have to get their stuff at. On those, cold winter days when it's under the margin, this is where it comes from. So, increased coal exports are going to replace a small amount of natural gas overseas. So we may be importing some more exports just because they make up for the power generation somehow. Might be cheaper. It's going to be cheaper now to run coal and overseas. So this could be a net effect, and this is kind of already been working its way in the market here a little bit. 2-4% premium going to market in some areas. Definitely in the PJM, MyServiceCloud markets are coal heavy generation because prices are going to go up as well for that coal. So that's slightly bullish short term. The block adjustments bolstering the case for continued growth of U.S. LNG export capacity. These facilities cost $5 to $10 billion. Require offtake agreements to get built. Been very, very quiet on any new builds after 2029 lately, and really we're kind of putting a stop at that level we saw on that chart last slide. So there's been minimal activity there, and announced new projects. This is likely to pick up. We have actually seen an increase in this in the past week of noise here of getting some of this stuff done because it's kind of a quote unquote safer US LNG products, a little bit safer because of our ability to get it shipped out and stuff and not being like a potential war zone, right? So this is slightly bullish for 2029 plus when we've seen this in those forward curves a little bit as well. And if crude prices stay higher, activity in the Permian Basin will pick up, which is going to increase the amount of natural gas being produced as a byproduct. When they drill in the Permian Basin, they're drilling for crude oil, and they base their activity level and whether or not they're going to drill or not. And produce based off the fact that where the crude oil price is. And now since that's been elevated, we have this increased amount of crude oil that could be produced and likely will be produced. And that's slightly bearish because now there could be more just gas on the market as well. And we're talking not 10 BCF, we're talking a couple BCF. So, but it is still adds. So it's slightly bearish. So that's really kind of our makeup of it. So you're not seeing a huge effect on power and gas prices. A lot of people are selling fear. I really highly recommend not trying to sell fear too much, especially the larger clients. You can work on maybe the small, medium-sized customers, but in the larger clients, be consultative. Tell them something that's different. That's how you're gonna get their attention. Tell them like, hey, calm down, be calm. We don't have to panic here, but we should have a plan here so we don't have to like chase volatility. So. If you want any more ideas on that, just talk to our team here. We're definitely here we are specialists in working with large commercial industrial customers. So that's where the activity there. And with that, and we'll see any slides here we're gonna go through real quickly here in a second. More of an uptick in power than in gas. And that's really just because of these more power related here, a little bit coal. And stuff like that. So, and with a little bit more of a neutral stance on gas. So, energy price market update. So, a monthly change here. Again, you see gas 2027. That's the next full calendar year. Just a 13-cent change in gas, but a 420 power move in Mid-Atlantic, Midwest about 3, New York 4. You see New England, bam, 7, 18 for the year. And 4 in Texas. And again, those power moves, a 13-cent move in gas, especially for Mid-Atlantic, Midwest, New York, Texas, for all these markets, a 13-cent move in gas, that should equate to roughly around a $1 move in power. Basically 75 cents to $1.25, depends on the region, but that's typically what it is. So you see the heat rates, what they call the power over gas ratio, those have moved out. We think everything's kind of really to be honest with you, we think everything's kind of priced into the market relatively fairly right now, based off of what's going on in Hormuz and the fact that this could linger around for another 6 to 8 weeks. So with a closure, that's our view on that. So we are now. Well, we'll get in a second here. NYMEX natural gas futures. Yes, you see here's the price movements. Again, we get these slides. We send these slides out weekly as well. Make sure you're getting it. If you're not, talk to your account executive. PGM power West prices. Yes, we're kind of hitting up here on some recent highs here since the mid-spring 2024 period when data center euphoria really took off. And we're kind of hitting those kind of levels up there. PGM West, look at the index prices here as well. We're back in a more tame area here in March in that like $40 area after a pretty high winter prices. And relatively Texas is now more in the lows here. We've been saying this is kind of overpriced as far as relative to gas for gosh, for the past like 6 months or a year. We're kind of getting into those levels here. We think there's relatively fair market value there. Again, here back to the LMPs. We had a pretty big January. We had a storm that was very similar to Uri, and we passed with flying colors because we didn't have a month that cleared 1,000. We had a month that cleared around the $80 level. So big kudos to ERCOT. We always talk about that. How great job you're doing. Everybody take a lesson. NEPO, all these highs here and all these calendar years. Yeah, this is a market here where going on index is quite dangerous. And here's the index prices of it. They had a quite high December, January, and February. And again, we talk about that in that one piece of why that's the case. It's a good piece to have and talk to customers about. U.S. natural gas storage. This is we are now approaching kind of really the period here where we're just going to be kind of flat here for a little bit. And you see in our forecast, no one else does this, by the way. The dotted line is the forecast for the next three reports. We like to put this out here just to kind of allow people the chance to see this, because this is where this is at here. This is priced in. Where this is at, this is pretty much already priced in the market, on the expectations. This is what kind of like moves it, and this kind of can move somewhat based off the weather, but this is based off the current weather forecast. We look at 15 days out, and this is about what it takes us to. That's what the market looks at too. But we're looking to kind of like be relatively flat here and finish right around this 1850 level at the end of the season, which is right on par with 23, 21, and 25. Of course, all different paths to get there. There's time where we look like we might be getting down this red line the way we're trending after Fern, and now we're just going to kind of end here right about the 5-year average, right in the middle of all these, and a good healthy level. And but now it's refill season, and different things come in there because we have a lot more generation, and a warm summer puts on a lot of air conditioning load, which means a lot of natural gas generation, and thus less, smaller injections. And that's now the thing we'll look at, but we don't have to worry about that for a month. It's this kind of quiet period. I want to call it that. We'd be very quiet right now if it wasn't for what's going on in our land. So natural gas production, cranking it out here. We're just, again, they're amazing flexibility now with these producers. They can ramp this up to probably 115, 116 in a matter of a week, and ramp it down to 110 in a matter of days as well. So a lot of flexibility and adjusting to where the weather is, the load, and all this. And this is kind of really interesting. It's a different dynamic in the last 10 years. But we are putting at 113.7, about 8 BCF higher than last year, which coincides with some of the increase in stuff, and we've seen an increase in LNG, send down about 3 or 4 BCF. But this is ready to ramp up, and it's going there. And the natural gas rig count is about a 6-month lag in production. They're ramping up the rig count, so they're getting prepped for all these increases that are taking place. And we saw this really ramp up over the winter. I think by about 15 or so. And I think that's just reaction again to some of the prices we were getting in the short term during Fern. Every once in a while, I like to show this chart. It's an important chart to show. It's a good chart to show if you want to put a bullish tint with your customers on this, because this is the production. When there's a new well drilled, this is the decline curve of it and the production value you get out of it, typical average production. So it starts out with 2.4 MCF a day, and you just look at this decline here, where it's like basically after like 18 months, you're about half the level where it was at, and after about 3 years, you're at about a quarter of the typical production level. So what this means is it's kind of like, you just need to keep putting wells out there to replace the production even of the stuff. So the simplest way I like to format this is we're at that 113 BCF a day of gas right now. If we just stop drilling, we're not producing 113 in a year. We're not producing 113 in 18 months. We're producing a lot less because these wells are declining. So more like 95 in a year. So we just need to keep drilling just to keep production at a certain level. And then layered hedging, purchasing in action. Again, this is want to show this chart again in case there's new people on here. This is an example of 2020 of a customer. This is a real life example of a customer that has been in our product for 4 years, and it just shows when they purchase at different times. And for the 2026 year of power, okay? So they purchase at these times. That's 1, 2, 3, 4, 5, 6, 7, 8. You see them all here. And then the median daily price. If you bought it any day during this same time period for 2026 power, this is what your purchase price would have been. And this is what the layered hedge average was at, this green level. And if you waited till a month before the contract was due, this is what you would have paid in December, and even higher if you went beyond there. But you would have paid these levels up here, which a lot of customers do. They wait till a month before. And this is why for large customers over 5,000 megawatt hours a year, 5 million kilowatt hours a year, I think that's in your language. This is where this is just a great product. This is a product we use for a lot of our customers. We send out a quarterly kind of hedge report on them, showing the markets at. We have them on like either an annual or semi-annual hedge, and it's an automatic renewal because it's not even like a question of renewal. It's more like, hey, we need to add on that year 3 or 4 out to this and start hedging that year as well. So it's an automatic process. Customers love this. This is Fortune 500 companies, 80% of them do layered hedging for a lot of their commodity purchasing. So it's important to keep that in mind. And you want to keep going here, taking forever. A couple of stats here, 68%. What does that mean? That's the number of households strained by energy bills, according to a recent survey. 78% of those households are concerned that energy bills will increase due to data centers. Not good PR if your data center kind of come in to a neighborhood, right? So this is according to a February 26th, so last month, Consumer Report survey. And this is just, again, feeds our story of we are expecting this to become a very, very large political issue through the 2020 election cycle. Energy prices are not going down. In electricity and natural gas, they are not going down. And this is going to become a big issue, and it's going to have people are going to be saying who did this and who did not, and everyone's going to be taking the side of like, I'm going to lower the energy bills and how it's going to be done, but not good for your data center. So data centers are going to be, you have to make this commitment. Good thing for data centers is, a lot of these, especially the big hyperscalers, they don't care about the energy price. They just want the connection. So they want the power. That's all they want. So, but it's going to be an interesting issue here coming up. So some box insights. You can read more about these, but PJM missed reliability target first time in history. The 2027-28 auction falling 6,000 short of reliability first time, 5.2% shortfall. We've kind of talked about this, but we're going to bring it back up. But I didn't know it was the first time in history it misses reliability requirement. So that's why I'm putting this on here. I just learned that a few weeks ago. Load shifting, the solar hours underutilized, with solar projected to rise, generate 17% and 26, 20% for 9. This connection to the grid. What it does is kind of cannibalization of those hours. So as more comes on, they can't really control. Of course, when it's generated, you can if you toss a battery into it, which is going to be a different game. But for now, in the short term, it's going to basically cause these prices to come down. If you have load flexibility, you can buy during those hours more, ramp up your production, whatever, because prices will be cheaper. So it's going to be an interesting dynamic in that realm. Large industrial turbines for new power generators are sold out through 2030. Yes, okay. You want to build a new natural gas plant? You need good luck. Get in line. You might not be able to build that thing to 2031. So that's for the large industrial turbines, the ones over 300 megawatts, the ones that everyone says we need to build, and we do need to build. And so that's an interesting dynamic to look at as well, which means cuts. It goes in the first one up there with reliability targets and the need for more generation. And it's tough to build if you can't have turbines. So lastly, just want to again tell you that we have all these tools here in our team. We do this weekly market update, we do blog posts, and we can also do for specific customers in a certain size. We're doing kind of custom presentations. We can put together a customer presentation for you and work with you on that. And where that says that Broker Online logo, that can be yours. So with that, I'll pass it back over to Allie, and she'll introduce Stephen here. Thanks, guys.
Awesome. Thank you, Scott. Definitely a lot going on in those markets, and definitely in line with everything that we've been seeing about rising prices. Thank you for giving us all of that context. Again, that PDF, this is recorded. This is going to go on YouTube later. We have a PDF giving you all of that market context and all of those pieces. If you guys want to connect with us and just talk about it, if you have a particular area that you want to look at as kind of local volatility becomes more of a story, we're also happy to have those conversations. Reach out to your account manager, reach out to us. We love talking about this stuff. Bookending that, we'll move into our exciting feature, which is going to be going through our system, MSC, or short for MyServiceCloud. And here to talk us through some of the features that we've rolled out this year and make sure that you guys can access everything, make sure that you guys know that we have a big, bad system behind us to help you guys, to help support you guys and to help you guys in your day-to-day operations. We have Stephen Morris. Stephen Morris is one of our senior most account managers here at Box. He's one of our, I think, Gen 1 employees, and he currently helps not only some of our more sophisticated brokers with which he's had incredible relationships over the last decade, but also helps to train all of our account management associates who may be new to the industry and may need some support, whether that's just general sales, which Stephen is a genius at, or more industry-specific items. He's really, truly kind of a master of all. So, Stephen, I will give it over to you, and you can talk us through what we are looking at with MSC and our system here.
Absolutely. Thanks for that introduction, Allie, and thank you, Scott, as well. Honestly, you built that up quite a bit. So, I hope I can do you justice. Now, that being the case, like she said, I've been here since 2016, and if there's one thing I'm really passionate about, it's our broker experience. Really, that's what we call it when it's what really is the experience that our partners get when working with us. We've seen a lot of updates through the years, and really, I'm excited to share a few of these updates that are really going to be game changers for many of you in the way that you operate your business. That being the case, first, I want to show you this new map tool that we have available. There's two ways that you can access this. The first way I'm going to show you is through your Customers tab. When you go into your Customers tab, you will obviously see where all of your customers live. And within this, you will see that there is a pin here. This is where we have merged in a a map feature. So at this point, you will now see all of your customers living in map form. They'll all have their own PIN. Obviously, you can zoom in based on them by location. as I'm kind of zooming in here, you'll see you can even enter them by location up here as well. Actually, I think I got one up here. Like, you know, what is, did I enter that one? Test, yeah. I think I got one up in Roanoke I wanted to use for our example. Here we go. Once you've realized that you're at the customer that you want to hone in on, you can actually click into it and access the customer, make edits as necessary. And really, this is going to be very valuable for people that are really boots on the ground, and not necessarily just for them, but for those groups specifically. Here's your map of maybe you're going to determine the order in which you're going to target a lot of these businesses. We do additionally have a tool here where you can toggle and cluster, because if you do have a lot of businesses here, it's going to be kind of hard to determine, hey, where do I start? Maybe there's an area where I can cluster these and, oh, look, there, I got 10 right in this area. You know, you're able to prioritize based maybe on quantity of how many are in a particular region. Now, additionally, you can use this same feature through the contract section. So if you were to click on the contracts section here on the left, as a reminder, this is where all your contracts are going to live. That same functionality is here as well. But I want to emphasize to you, it is important that you make sure that you don't necessarily just do this for all contracts, because you may have some contracts where maybe their status is a customer that's never signed up with you yet. Maybe you have the contract up for signature and it's still, you're still working on getting that customer to be a part of your portfolio. But really, where you have the ability to include them if you want, but ultimately, I would encourage you to focus on the filters first. So when you're in here, you can really filter based on the status. And really, I would say maybe we focus on ones that are in accepted by supplier status, probably also a modified status. And then additionally, we have reinstated status. Because as you know, sometimes you have a deal that might get accidentally slammed, and thank goodness we have a retention team that is actually able to help you keep those on the books as well. But now that I have this filtered to accepted by supplier status, here we go. Here is our map view through based on the customers that we have contracted. And as I mentioned, this is going to become really valuable for the people that really want to kind of use this as a visualized version of their Rolodex of businesses that they have as a part of their portfolio. Now, that's the map tool. The next really important tool that we developed, and I'm incredibly excited about this, this is something that is going to be very valuable to you. So I urge you to really take stock of this. It is our target price tool. So I'm actually going to go into that box sample customer. I'm going to go through the customers. And first, I want to emphasize to you really what it looks like when we have this created, right? As you may know, you have the ability to create your customers, but once you're in a customer, and I'm going to choose box sample customer 2, this is going to enter our customer where we have all of the customer's information entered, the account information, any necessary documents. Well, if you remember, there's a quotes tab here, and within the quotes tab, I actually have a quote that's already in here. You'll see there's obviously an expired status, a pricing received status. We can even create a new quote if we want. Maybe we wanted to do a different type of product, you know, whatever the case may be. But ultimately, whenever you are looking into a quote, and actually I will create a new one, just that way you can see the journey of this a little bit. But when I hit create new quote, I'm going to select new instant matrix pricing for this customer. We have our account selected that we want to get pricing for, and we want to make sure we choose the correct start date. You know, just as a reminder, we don't have to wait until, we don't want to wait till the last minute. If we know when a customer expires, choosing that accurate start date is not only good to make sure we don't overlap any previous agreements, but it can be really beneficial for them to monitor and really make an educated decision on when it's a good time to lock in. Not just wait till the last minute and be at the mercy of whatever the market is at that point. That being the case, we'll just pretend that for this example, this customer is good for a next month start. And then once we go to the next step, we'll determine that they're really just looking for a fully fixed all-in price. Now, once I've done that, you'll be able to choose and determine what margin you want. We'll just do a 5 mil adder here, 0.005. And then it's going to, at this point, determine which suppliers are now available for you to get pricing from based on the parameters that you selected. Now that I have that selected, we are going to look down and voila, here are our rates. Now, this is where the target price comes into play. You will now see that I have this down. There is a target price section where it says create alert. When you select the create alert function, you can actually change the name of the alert. You can customize this and choose the target price. Maybe the customer's told you, you know what, I'm really not going to make a decision until it hits 8.9 cents. You can determine to put that in as a target price. You can set their expiration date of when you want alerts for. And when you create this alert, it's now going to be highlighted in red to indicate that there is a alert created for this particular offer that you're presenting to this customer. Now, that being the case, you're going to get email notifications for this. You're going to get email notifications anytime that there's a change to the alert, if the alert expires, and then obviously, and most importantly, if that target price gets met within that time frame. So you will get an email notification as soon as you are able to see, oh, hey, that customer's target price they just told us we need to hit, we're there. At that point, you can then have the appropriate conversations. But I do want to emphasize something. Within these alerts, there is an advanced settings portion where you can even hone in and specify, you know what, they only want that price and they're only willing to go with X, Y, and Z suppliers. You can specify the suppliers that you want to make sure that you are meeting that price, as well as a specific term length. Like, hey, they really need that price and they need it for 24 months. Those, we can even get that that specific. Obviously, if you're not getting that specific, you're going to get the updates based on the generic information you enter here at the top. Now that we're in here though, I do want to emphasize there is this little bullet point chart button. It's probably one of the coolest things I've seen within the price, the target price functionality. When you select this, it'll give you a line chart of the direction of pricing. And to really show you the gravity of what this looks like, I have an older price alert that I created, and so I'll actually share that. And by the way, when you're in here, you can expire an alert if you're past, and you don't necessarily need to continue getting alerts for a particular deal. Now, I'm going to go to where those target price alerts are. They are actually going to be within your tools and resource section. Now, I'm going to dive in on tools and resources here in a second. There's a lot of underutilized stuff that I want to make sure you guys know is out there for your disposal. But when you select tools and resources, to kind of tie back into what we were just discussing, target price alert manager. If you select this, every target price that you have been trying to monitor, it's all going to live here. And I have, for the sake of this example, one that I created earlier this week. When I go into edit, that's by selecting the three dots under actions here, and I select the chart, this will give you the trends that are occurring based on those target price alerts. So like I said, that's really incredibly valuable data, very helpful to really educate the customer on what the market's doing specifically for that quote that you're doing with that customer. Now, let's talk a little bit about helping provide customers more value. You're the consult, right? You're the consultant that is providing them all the value, that's separating yourselves from the competition. Well, within our tools and resources, I want to emphasize a few things. Obviously, we have some tools in here. Some of it's more elementary, basic things that can be helpful to you. We have a broker resources tab where there's, LOAs, utility specific LOAs, that kind of thing. And then, and I also want to chime in, there is a MyServiceCloud software features tab, which actually has a lot of videos just like this one I'm showing you live right now, where it has some of the other features of the system where you're like, hey, how do I do X, Y, and Z? We have some pre-created videos for you there as well. Now, that being the case, power, historical, and forward curves. This is one of those additional tools that can really help set you apart. When I click on this tab, it's going to take me to a blank chart for a second, and it's where we're going to need to enter in the criteria that we need in order to get really valuable data that can help a customer make a more informed decision on how they want to proceed. Additionally, you're going to choose the ISO. So let's just say they're in the PJM market. Maybe they're in Pennsylvania. You know, we got a Pico customer here. Once I've selected the zone, I want to choose the term length that I want to look out for. Maybe they're looking to do something, you know, hey, do I really want to go long term? What does it look like for the next 3 years? And then you ultimately want to put in your adder, which keep in mind, this is in megawatt hours here. So if you're used to putting in 5 mils, that's $5. Now, once I've entered in my criteria, I'm going to select apply. And aha, here are our data points. Now, this is where this gets really valuable. And I'm actually going to hone this in. Let's say we're looking in more immediate future to the next 12 months. Let's say this customer comes for expiration. You know, maybe they're coming for expiration in the summer, right? And you're providing this data for them. You can allow them to essentially they can come to their own conclusions based on this data that you're giving them. You know, hey, if they're about to expire and let's say we're sitting in May, hey, I think we're kind of already at the last minute. I think you need to sign. Well, I technically still got a month left. Are you sure the market's not going to go down more before I'm going to sign? This is where this type of data can really be that end all, where it's like, hey, we need to stop talking about this. I have the data here that tells you why it's a good time to make this decision right now. And then ultimately, that's really what separate you as being just a flash in the pan to being their more consult that is going to give them the most educated information that they can, so that way they can make the decisions that are going to make the most sense for their business. Now, that being the case, as I mentioned, there's a lot of different tools and resources in here, but I am going to leave it at that. If you do have any additional questions, feel free to reach out to me or your account manager. As I mentioned at the beginning of this, we are deeply passionate about the broker experience, and that's really what we're out here to do, is provide you the best broker experience possible. So with that, I will pass it back over to Ali. And yeah, thank you guys so much for listening and being a part today.
Awesome. I think we had, Scott, do we have any more slides and closing thoughts, or are we?
We just want to close a couple things. One is, which Stephen finished up there with the charts there. On the forward curves part, what's great on that is you can choose kind of where you want to close it. You can find like that kind of the sweet spot by yourself in a way, because you can see like, oh, okay, here it's way up. Like a knee pull, if you look at the knee pull one, it's gonna be way up in the winters, right? So you might want to make, oh, I can get a little cheaper price if I stop this in November versus there. You know, it's to kind of, again, you're gonna eventually have to buy those winners, but you can kind of maybe, if you're trying to get competitive on it, trying to get done. And the historical ones, same thing. You kind of look at it and show customers, here's how it's moved. But what's beautiful about those historical curves, and why we have in there the adder part, is it doesn't matter what product or kind of margin on it, or what kind of adders the retail supplier has in it because of risk stuff. You know, you can like, those are based off the wholesale prices, but if you say, I've got this customer in PG and Pico and they're looking to buy for 27, 28, 29, you can go in that historical thing. You can actually average out the curve so it comes in there in one price. It sounds confusing, but you can then put, like, say your price you're currently showing the customer for around that term is $80, and the price shown on there is $55 because you're adding in everything. You can just put a $25 adder in there and show them, like, here's historical prices based off of your load, and then there's not that confusion, like, well, why is historical prices showing 55 and I'm paying 80? And it's an awkward conversation because they're going to be like, how much money are you making, Mr. Broker, on it? And so it kind of eliminates that. So you can actually show these prices with and tailor them towards that. But that's really all we got. Thanks for trying to see it. It's like all these tools. We keep having meetings, and I'm out here in Dallas right now, and I've had multiple meetings about different ways we're going to build more and more tools for you in this customer experience. And our goal is to basically make your job easier. So all you need to do is go and get contracts signed and go meet people and do that, and we take care of everything else, and it's really efficient. You just come home, you got reports, commissions, all this, and go in tools and grab them. And my strategic solutions team that myself and Ali head up, we can help you and work with you on closing deals and building presentations for these larger custom ones. And but that's really what we're all about. And we got some really exciting stuff coming up. The target thing, we got some interesting stuff on the custom side too, of kind of coming in with some estimated pricing tools and stuff, and setting targets on that as well. So, but all this stuff, and we're excited. If you have any ideas and new stuff to add, just let us know. And that's really all we got here. Ellie, anything else?
No, I think that's it. Thank you guys for taking some time this Wednesday, and we will see you guys next month.
Yeah, see you guys next month. Have a great Easter, everybody. Great rest of the spring here. Enjoy. Thanks for joining. See you next month.